Okay, so we've got around 90 minutes left to go now in the session on this, the real-time US market session on Wednesday, the 11th of June. And I'm going to do a follow-up video. We did a video around an hour into the session showing the first couple of trades that were available and where to come out of them. This is the 1 minute chart, but I've zoomed it right out so that we can see all of today's price action. So a quick reminder, this was pre-market, there was the PPI data release, and we started coming off. And we'd had these block trades up at the high and then down here just prior to the data release. So go back to the pre-US Open market update that I did an hour before the US Open, or 90 minutes before the US Open today, and I said, look, after the volatility around the news, we would expect a largely range-bound day, given that we've got the PPI data coming out tomorrow. And more than that, we were looking for the idea that the larger degree top is in and that we're going to see a pullback into around the 20th of June. That's based on the daily updates that we do each night and the cycles work that is suggesting that the market should be about to see a pullback. So if anything, if we were going to break the range, we were looking for it to be to the downside. I'm just going to zoom out for a moment to a 15-minute chart, and you can then see quite clearly, you know, there's your spike and here's your chop within the range. And then around 15 minutes ago, we've just dropped below the range, but we've not taken out any key support. And in fact, all we've done is spiked below yesterday's New York PM session low, and then started to reverse again. Now, going back to our 1 minute chart, given that we expected a range-bound day, it would then suggest that we should be looking to play the range if we're going to trade it. So you do need to go to a 1 minute chart. On trend days, then what tends to happen is you would get that early trade in here, and instead of stopping here, it would have continued, taken out the pre-market high, and then you can just trail up, and we can use 5 and 15 minute charts to manage the position. But on a day like today, you need to come down to the 1 minute chart. Now, I'm just going to zoom back out and go over to where we left off earlier on today. So we'd had this trade coming off here, and we'd had this secondary trade here, and the suggestion was to bank it, given that we'd reached the 1.0 extension where both these legs were equal and our expectation for a range-bound day. More than that, we had a CRSI sell signal, we had a trender diverged sell signal as well. So you banked the 20 points, you should have made more than that if you had doubled up on the add position. Now here, you can go short, but it's more risky. And what was better is we broke the hourly support resistance level here. And what we look for is the retest, and the market picture perfect. There was the retest, there was the trend to sell to go with it, and down we came. But where did we stop? We stopped again at the previous hourly support resistance, bounced, broke, and then there is your next set of trade if you want it. My suggestion would be this, that you want to think twice and twice again about taking these. You've finished the New York AM session. You've got 20 points on what's expected to be a fairly low volume range-bound day. And you're going into no man's land, followed by the New York lunch session, and then you've got the no man's land again before we get the volume in the New York PM session. Better, in my view, to wait for the New York PM session. If you've got an open position and you're trailing stops, that's fine. But don't torture yourself with trying to catch everything. If you wanted to catch them, then you can go back and look at the CRSI buy and sell signals. So there was a buy here, sell here, and a secondary sell, and there. Now, let's move forward to that New York PM session where we start to get interested again. And you can see that in the no man's land, the last trade would have been to the upside. Here's the hourly support resistance, but it was heading towards that high where we'd had block trades coming in earlier in today's session, and that had caused the drop. We got a squeeze building up here. We got momentum going negative. we got a CRSI sell and trender sell right at the opening of the New York session. Down we came, broke the support resistance, tested it. There was your entry up at 60.48, and then down we came. And this just didn't stop. All the way down here, you can see the CRSI, it gave the follow through breakdown sell signal all the way into here. Small bounce, but CRSI, nothing telling you to get out, then down into this low here. So it gave you the trade entry up at 60.48 all the way down to 6,008. So a 40-point trade. Now, before I point you at something else, which I'll come to in a moment, you could see as we came off here, the momentum was already starting to come back up. The trender was diverged, gave you the buy signal, then the CRSI buy signal, and the consensus of signals going long. That gave you the opportunity to take a long trade if you'd wanted to do so off that low. But again, no need. You got 20 points from earlier. You got 40 points from this. That's 60 ES points with next to no risk taken at each entry point, and you were able to de-risk the trades almost immediately in all cases. We've got PPI tomorrow, and you're going into the last 90 minutes of the session. There's no real need to start to take risks. Now, the only other thing to point out here, so this is the CHARM map, and this is GEX, which is today's open interest. And you can see there was a huge support. This is SPX at SPX 6000. And where did we stop? Right here. So this is SPX price. This is options flow here. So you can see that ever since the open today, the flow has been negative all the way through. But we've now come down into a huge support. The other level, interestingly, was here. That was at 60.25 in the SPX. And you know, the odds favoured if we broke that, then we drop swiftly down to that 6,000 area. Now, the equivalent here in the SPX, is in the ES rather, is this level here that kept testing. And this time we sliced through it, and guess what? Down to the equivalent of the SPX 6000 level. And if we just look at that in the SPX itself, excuse me, let's just tidy this chart up, then you can see there was this 60.25, 60.30 area that held. You can see here, that's where the block trades came in just before the news announcement. A break of that, and it was always likely that we would slice straight back down, and guess where we ended up? We spiked below the 6,000 level and an immediate reversal off it. The other clue, tested it once, tested it twice, tested it 3 times. Odds would favour coming down again that we were going to break it this time. No matter, you were short from up here in any event, and therefore all you needed to do was trail your stop down as you went along. Do not trade or hold positions against the CRSI buy and sell signals. And again, just to point this out, sell, buy, sell, buy, and sell. Okay, so as it comes back in to the dynamic bands, therefore sell, buy, sell, buy, sell, buy. If you could have no other indicator, then the CRSI is absolutely a license to print money. And as you know, you've seen me do this a load of times. You take everything off the charts and, excuse me, there we go. And that, and you mark up the buy and sell signals from the CRSI blind, and then you put the price back on the charts and see what you get. And it's absolutely shocking the way they line up, and it does it on all time frames for all instruments. Okay, so that's a quick recap of the rest of the day's trading for today. And as you can see, we've pushed back up now to, you know, we broke this range here, came down to the bottom of yesterday's range, and now we're coming back up to either test or close back into the range. If you're long off that last entry from the lows, then I would suggest you take some off and just trail up. and then go into this evening as the market closes flat, and let's wait and see what we get from the PPI data tomorrow and do it all over again.